A property insurance or reinsurance underwriter must assess construction and occupancy as key factors in evaluating risk. These components influence the likelihood, severity, and cost of potential losses, forming the foundation for accurate risk selection and pricing. The type of construction encompasses materials, design, and methods used to build a property. These factors determine resistance to hazards such as fire, windstorms, earthquakes, or floods. Building materials: steel, durable and fire-resistant but can weaken under extreme heat. Wood, common in homes but highly flammable and prone to rot. Reinforced concrete, strong against fire and earthquakes but costly to repair. Brick/masonry, fire-resistant but vulnerable in seismic areas. Buildings are categorized by fire resistance levels. Height: taller buildings face wind pressure and evacuation risks. Structural integrity: foundations and reinforcements impact resilience to disasters. Traditional versus modular: modular is quicker to build but may lack durability. Occupancy relates to how a property is used, which affects its risk exposure and severity. Different uses carry unique hazards. Types of occupancy: residential, risks include fire, theft, and water damage. Commercial, varies by business, e.g., offices versus restaurants. Industrial, factories and warehouses face fire, explosion, or machinery breakdown risks. Fire hazards, high in factories with flammable materials or restaurants with open flames. Foot traffic, retail spaces risk liability claims from slips and falls. Storage, warehouses with hazardous materials face higher exposure. Effective safety management and compliance with regulations reduce risks. Risks of revenue loss due to downtime are significant for commercial and industrial properties. The interplay between construction and occupancy defines a property's overall risk. For instance, a steel-framed warehouse storing flammable liquids has heightened fire risks despite its fire-resistant structure. A wooden residential property with advanced safety measures may pose lower risks. Properties with higher risks require higher premiums or stricter terms. Hazardous occupancies may have exclusions or specific conditions. Accurate construction and occupancy data support reinsurance pricing and coverage structuring. Understanding construction and occupancy enables underwriters to evaluate risks accurately, align policies with company risk appetites, and ensure appropriate pricing and reinsurance arrangements.